All right, so the title of this short video, and I'm going to try to keep this short, is do you really need to have a perfect credit score? Now, off the top of my head, before I even start, I can honestly say, no, you don't have to have a perfect credit score. However, having a perfect credit score, in my opinion, is not only advantageous, but it's also important to building the self. Because one thing you have to understand is that your credit score is tracking your behavior. Your credit score is tracking your long-term adherence to the credit card system or the credit repayment system. Because first of all, let's understand what credit is. Credit is when the banks lend you money, you promise to pay it back, and then you do whatever it takes to pay it back. The term mortgage, for example, comes from Old French and it means death pledge. And what they're saying is, I pledge my life to pay this money back to you, right? So ultimately, the way everyone knows whether or not you're credit worthy is by looking simply at your credit score. Now, I know there's a lot of people out there who've made bad mistakes with their credit or who've just straight up ignored their creditors and haven't paid them back, and then they want to claim that it's for other reason that their credit score ain't shit. They claim that their credit score is down because of racism. They claim that they can't get the loan they want because of their gender, or they claim. But understand something. The bottom line is credit is tracking your behavior, and not only that, credit, the scoring system is designed as a very quick way of banks to be able to assess the risk that they take giving you money. If you have an 800 credit score, the banks look at you as less of a risk than somebody who has a 550. So, really quickly, before I even start, I'm going to just show you my credit score. This is my credit score. Wells Fargo owns both of my mortgages. I had paid them off, and when I get a third mortgage, I plan on using maybe Wells Fargo again. Because honestly, to tell you the truth, some people are like, oh yeah, this bank is better than that bank. To tell you the truth, the bank doesn't even really matter, because if you get a loan or if you get a mortgage from Wells Fargo, it's really no different than getting it from Chase. It's really no different than getting it from like Capital One. It doesn't really matter. Now, the bottom line is, I live in New York City. The housing market is crazy, and I was looking to purchase a third house before the market goes through fluctuations. And the reason why is because right now the interest rates are 3%. So if I can find a property that I want, that I'm willing to pay for, then I would buy it. And the mortgage rates right now 3% fixed for 15-year, 20-year, or 30-year. You can get lower, but 3% right now is about the base line. Some people pay a little bit more and they get less of a rate. But the reality is, me personally, I understand that people are trying to fix their credit. And as you can see, this is my score history. I understand the reason why people are trying to fix their credit. It's because chances are you tried to buy a car loan or you tried to get a home loan and you were denied because your credit just looked like shit. So what you're ultimately trying to do is you're trying to fix your credit in order so that you can take out a larger loan. So for example, if you and I went to shop for the same exact car, now I have an 850 credit score, and let's say somebody has a 300 or something, obviously that same car is going to cost me less than it's going to cost the person with the 300. Because what they're doing is they're saying, oh, you know what, this person with 300 is more of a risk, so we're going to charge this person more interest. Now, the liberals are trying to get rid of the credit scoring system because they want to be able to equalize the high credit people with the low credit people, but that's never going to work. The banks are never going to go for that. And me personally, I'm against that. I worked very hard to get my credit score from 500 all the way up to 850. I had to pay off my student loans. I paid off my credit cards every single night. Like, I would use them during the day for buying anything that I normally buy, and then I would pay them off at night using my cash. I would never pay interest because I paid my credit cards every night. So as you can see, this is my score history. I think anybody who goes online and gives advice, I think they should be forced to show receipts. So I don't mind showing the receipts, but this is my score history. As you can see, I did take a dip when I had paid off one of my mortgages, because when you pay off your mortgage, what that does, it reduces your credit use, because what they're trying to basically do is they're trying to make you have as much credit availability as possible, but they're also making sure that you're using less than 5% of it at any given time. So I did take a dip back in May by paying off one of my loans. And just so you understand, because some people are like, how the hell did you pay off a mortgage? Well, I made a lot of money in stock. I made a lot of money with Tesla stock. I made a lot of money with oil stock. And you probably noticed that there's a lot of people in the stock market. They're making a lot of money, and a lot of them are options traders. But I made a lot of money on Tesla, and I made a lot of money on oil. And when I sold it, I kept the cash, and then I took the cash and I used that to pay off the mortgage. So I took a dip, and then it went right back up by June and July, because the thing about it is my credit availability is so high, until I guess the bank said, yeah, he'll take the like a 20-point dip, 24-point dip, but then I came right back. So my personal recommendations for you in order to build your credit score: don't go to a credit building place. Don't do that shit. The best things you can do is you have to assess how much debt you have, and then you have to design a plan to pay off that debt. Now, first of all, you have to have a job, because you're going to need cash. You're going to need cash money. Not only that, the credit bureaus know whether or not you're working, and whether or not you're working is a factor in your credit. Now, I recommend you have a job, you pay off the highest interest rate debt that you can pay off first, because the higher interest rate debt eats into your savings more. And you can't save money if you owe credit card debt, or if you owe car loans, or if you owe a mortgage. You can save some cash, but the problem is the value of your cash is being eaten up by your high interest credit card debt. So my recommendation is you have to have a job. You have to decide how much money you're going to apply to the debt every single month, and you have to pay it off as quickly as possible. Personally, I had a second job and I had a third job because I was doing YouTube, and my YouTube was earning so much money that it counted as IRS taxable employment. Once you make more than $600, they count it as taxable employment. But I was making $2,000 a month on YouTube, and this was years ago, and I'm still doing very well on YouTube. I'm making a little bit more than $2,500 per month. So what I should say is, you have to target how much money you can afford to pay towards your debt per month, and then you just have to work on paying it, but you have to be disciplined to pay that amount of money. So that's my credit score. People who follow me know that every now and then I do a video about credit. Usually I do videos about stock investing. A lot of people don't like to invest in stocks the way I do, because I'm not trying to get rich quick. I'm trying to do decent investments so that I make money over a longer term using dividend reinvestment programs. It's called a DRIP, D-R-I-P. So enough about me. It says why having a perfect credit score is overrated. Now, they're trying to tell you you don't need one. So let's understand their points. Their points say there's no such thing as perfect credit, except when it comes to your credit score. We have a precise number for perfection is 850. Yeah, guess what? I have an 850. Very few of you, especially colored people, have an 850. But I just happen to be a black man living in New York City with an 850. So there's a lot of white people out there who ain't got no damn 850. In fact, most of the rich ones don't have no 850, because a lot of them get fucked over by divorce, and a lot of them do stupid shit like they buy Lamborghinis and they forget to pay the bill or whatever. But whatever that is, my bottom line is I'm a black man, 39 years old, and I've had an 850 credit score since I was 38. Okay? So just so you understand who you're dealing with here. So it says pretty dang high, right? It is when you consider that the average FICO score in America is a 711. Now, I'll tell you right now, a 711 is it's average. It's at the top end of being average. It's not. In order to have excellent, you have to be at about a 750 or 760, I think it is. While the average Vantage score is 688. 688 is poor. Anything lower than 700 is basically poor, because what it does is they're saying that, yeah, there's definitely something wrong with you. And yet we hear it all the time in the world of personal finance, students loans, and real estate. It's like a taunting mantra. You must have perfect credit. So I'm going to just say it again. You don't have to be like me. You don't have to have 850, but you're definitely going to want to have above a 760 or a 750. See, the thing about it is, once you go above about a 750, you're in the top tier credit. So basically, once you're excellent, it doesn't really matter anymore if you're 761 or 770 or 780. It doesn't really matter. It looks good, but it really doesn't matter. All right. In short answer is no. Having a perfect credit score is overrated. Yeah, says you. I want to see your credit score. Let me see. If you're going to write about this, Nicole Spector, I want to see your credit score. Show me your credit score. I showed you mine. I'll show you my whole goddamn credit report. Where's your credit score? If you're going to talk about this, you should be able to show yours. I show my receipts. So anyway, the two primary reasons that a perfect credit score is overrated is that reaching the 850 level provides little benefit to the individual. And attempting to take advantage knocks you from the lofty perch. Well, you got to explain to me how taking advantage knocks whatever. An 850 score gains no advantage over someone at the 800. You know what my advantage is? My advantage is when I walk into a car dealership and I decide that I want to finance or lease. My benefit is that when I walk into a real estate office and say, "Excuse me, Mario's the guy who sold me my last house. I'm looking for a third house. Mario, I want you to find me a third house, and I want it to have an in-ground swimming pool, and I want it to have 4 bedrooms, and I want it to have 2 bathrooms plus a basement that's finished." The advantage of having that 850 over an 800 is that when they look at that extra 50 and they like, "God damn, your credit's higher than I ever seen before. Are you sure you black? You sure your name is not Lefkowitz? You sure you're not mixed in with something else?" It's like, "Nah, look at this. I got black skin. I'm black. So guess what? Go get me my house." See, I'm not out here complaining about racism, because the thing about it is, when I walk into the bank, I can walk in with no clothes on, and they still got to give me the best credit, simply because I have the 850. So yes, there is a difference. It's in my ego. And some people be like, "Oh, you're so egotistical. You shouldn't talk like that." Go throw yourself out a window. I got an 850. 850. Look at that. 850. That's the advantage. Because now I don't have to take shit off of anybody. When I walk into that bank, you're going to get up and give me the best deals you got. No excuses. So it's like, you can't say that I can't offer you this because you don't qualify. No, I qualify more than you do. When I go into my bank, the manager talks to me and gets me coffee. The manager. They're like, "Oh, hey, how are you? It's nice to see you again. Are you interested in any of our services?" Well, see, they don't do that for the regular people, because the regular people ain't got an 850. And that's just what it is. That's just what it is. So yeah, there is an advantage. Yes, it's a bit ego, but it is an advantage. Okay, so it is an advantage. But the only person who would say that there's no advantage is Nicole Spector, because I don't think she has an 850. So anyway, experts consider a credit score above 780 to be excellent. See, I said 750, but if they're saying 780, now, by the way, it does say experts, so that's a word you should watch out for right there, because who the fuck are the experts? And before you call yourself an expert, show me your credit score, okay? I can call myself an expert because I built my credit from 530 all the way up to a 850. So unless you've got excellent credit, you ain't an expert, okay? Most consumers with ratings in this range garner the best borrowing terms. Goddamn right. lowest interest rates and cheapest insurance premiums. Now, let me just say this. There's a lot of fake gurus on YouTube who talk about, oh, you don't need to play the credit card game. You don't have to have high credit. Let me tell you something. There are jobs out there that won't hire you if your credit's not good or excellent. There are higher rates for your car insurance. And you can talk that shit about, oh, yeah, well, I got cash. I can just pay it all in cash. Well, guess what? You're going to pay more no matter what, because some of these things do not work using cash. Some of these things demand credit. There'll be jobs that you don't qualify for simply because your credit score ain't shit. So yeah, it does matter. There are apartments. Have you noticed over the last 2 years, there's a lot of landlords who couldn't collect rent because their renters lost their jobs, their tenants lost their jobs? Renters check your credit score. They want to make sure that they're dealing with somebody who is credit worthy. So yeah, it does matter. And the next time somebody tells you you don't need to play the credit card game and the credit score don't matter, oh, all you got to do is buy it in cash, tell that person, yeah, it does matter, because it does matter. In this country, it matters, okay? So anyway, in other words, most lenders and insurance companies do not differentiate offers in a meaningful way to people with excellent scores. Yeah, well, okay, you believe that shit, Nicole, but I'll tell you what, it works a little bit differently for me. Especially, tell you what, Nicole, how many houses do you have? I got 2, and I'm going to buy a 3rd. How many houses you got, Nicole? So anyway, in many instances, having a good credit score, 700 plus, will reap the same benefits as having a perfect credit score. That's not completely true. You just said it was 780 that the experts, quote unquote, say that, makes it so that you get the best. No, I want the best, best, best. You want the best, but I want the best, best, best. Say it with me. I want the best, best, best. I want the top, the tippy top. That's what I want. I came here for the tippity top. Not the best. I came here for the best, best. Best. Best, best, best. See, these people don't understand. This ain't no motherfucking game. So anyway, Bateman stressed that it's more important to simply have a credit score than to have a perfect 800. Wait, it's more important to simply have a credit score. All right, what I will say is this. Now, he says without one, you won't be able to borrow money or make large purchases. Now, this right here, this statement right here, I have to agree with. I had a friend who asked me to go car shopping with her. Now, you know how I feel about certain cars, but I'll tell you like this. We went to a Nissan dealer because she was looking for a Nissan Altima. Turned out that because she was married and she let her husband do all the financial stuff, she herself had no credit at all. And when I say no credit at all, most people aren't going to believe this, but I saw her credit report when the dealer pulled it. She had a 0. I never saw a 0 score. She didn't have bad credit. She had a 0, a no credit 0. It said 0 on her credit report. Now, I know some people would say, oh, that doesn't make sense. No, she had no credit at all. She was a first-generation immigrant to this country. She had 0 credit. 0. When I say 0, I mean the big number of motherfucking 0. She couldn't qualify for the Ultima at all. They said that they could qualify her for financing on a Nissan Sentra. She wanted a slightly bigger car. So what ended up happening was I told her, listen, this is not going to work out for you because you needed a bigger car. So what I want you to do is I want you to take out a credit card and I want you to start building your credit. All you have to do is make very small purchases, pay it right back. Bottom line is she didn't listen to me. She was a first-generation immigrant. The country she came from, I guess they didn't believe in credit or whatever. So the bottom line is she ended up saving up cash and she ended up buying a used-ass Honda from one of my co-workers who was selling a used-ass Honda, and she bought that Honda, and the thing has over 100,000 miles over it already because it did before the person sold it. Now, the question you have to ask yourself is, Is that the kind of shit that you want to deal with? Do you want to have to buy somebody else's used car because you can't afford to get financing? And I know a lot of people like Dave Ramsey and all of his followers are trying to tell you, oh, you don't need financing. Well, guess what? Unless you're walking around with $50,000 in cash in your pocket, or unless you're walking around with $500,000 of cash in your pocket so you can buy a house, chances are you need financing of some type. Now, I'm not telling you that it takes you 30 years to pay off a house. I'm not telling you it takes you 7 years to pay off a car. You can get financing for less than that if you're willing to pay more, or if you can pay more. But the bottom line is, in this country, a 30-year mortgage, for example, is the norm. And the reason why is because they expect people to marry in their early 20s. They expect people to stay married until they're in their 50s. And by the time they're in their 50s, they'll be paying off their house. By the time they're 60, their house is paid off. It's now an asset. And then they're stepping into Social Security and retirement. The problem is Americans are wasting so much money until, first of all, they're buying their houses later. A lot of Americans aren't buying houses until they're in their 30s, mid-30s, late 30s. 30 years is a long goddamn time. So if you have a 30-year mortgage, it's going to take you until your 60s to pay it off. And that's assuming that you do not modify the loan. If you modify the loan, it's going to take even longer. Some people modify their loans to take out cash, and they increase the term of the payment in order to ensure that the monthly payment is affordable. That's a mistake. But the bottom line is, if you don't have any credit at all, you're not being able to finance a house. And the most of you need some type of financing. Now, I know there's these credit fake-ass gurus who will say you don't need financing. Yeah, the fuck you do. Because most of you do not have the cash in savings. And then there's some people who'll say, you know what? Oh, well, I'll just save up the money. I'll rent, and while I'm renting, I'll save up the cash money. Well, guess what? You're chasing inflation. Think about it like this, guys, and you can say I don't know what I'm talking about, but I've got 2 houses, I got an 850 credit score. You could say I don't know what I'm talking about. Here's the thing, guys. We already know that the Federal Reserve is printing money. We already know that the Federal Reserve has kept interest rates at basically ridiculously lows. They call it quantitative easing. So we already understand the word inflation, or at least more people understanding inflation. By the Federal Reserve keeping the interest rates low, what it's doing is it's knocking down the value of your money. By knocking down the value of your money, that means that the more cash you save up, the less it's worth. Therefore, you only have really one option. Put your money in the stock market. Now, I'm not telling you to put your money in the stock market because the problem is the stock market dips. It grows and it dips. It waxes and it wanes. You can be up $500 today. You can be down $1,000 tomorrow. You can be up $1,500 a month from now. You can be down $2,000 2 months from now. The stock market is a roller coaster. So the thing about it is, old school people, they want to save their money in cash. I've got no problem with that. The problem is, what happens if your cash is worth less and less and less? See, the thing a lot of people don't understand, inflation doesn't affect the money itself. Inflation is affecting the price of goods. If I hold up a $20 bill, a $20 bill is worth $20. Because the dollar is the basis of our currency. Problem is, $20 may not buy as much years from now as it does now. For example, you used to be able to get an entire McDonald's meal for like $7. Now, that same McDonald's meal may cost you closer to $11 or $12. You still have the same $20 bill. The thing about it is that $20 bill buys less. So inflation is basically a tax on the value of your money, and you feel it when you pay for something. Like, for instance, gas prices. Back in the 1950s, it might have cost you, I don't know, 50 cents to fill up your gas tank back in the 1950s. Now, in the 70s, gas prices rose. In my lifetime, the highest gas prices I ever saw was during Hurricane Katrina. The bottom line is, money itself is a commodity that we trade for other commodities. So I take my cash dollars, which is paper currency, and I trade it to buy other things. The bottom line is, inflation affects how much the pile of cash you have is worth. If you have $100,000 in cash, $100,000 in cash used to buy a full house. There are some houses that are still less than $100,000, but here in my neighborhood, I live in New York City. $100,000, you can't buy no house for $100,000. Right now, you need no less than $400,000 or $500,000. Back when my grandparents bought one of the houses here in New York City, they only paid like $50,000. So what that means is that over time, money, the cash dollar bill, is worth less. Now, this is a deep conversation, so I'm just going to try to go back to the credit. Bottom line is, you need credit just in case there's something you need to finance. And yes, it is possible to have zero credit or no credit. Yes, it is. Let me speed this up. If you do manage to obtain a perfect credit score, bear in mind that your perfection may not last very long. Yeah, well, let's look at my, my thing signed off, but I can sign back in. Bottom line is, I've had 850 since my last birthday, and that was last year. So the thing about it is, in order to keep that credit score, there's a couple of things I've done. Number one, I haven't taken out any new debts yet. I do plan on buying a third house, but I haven't done it yet. When I buy that third house, chances are I may take a hit to my credit score. It won't be 850 no more. Okay. Furthermore, I don't go crazy in malls taking out new credit cards. If you add on lots of credit cards, that signals the bank that you're trying to take on more debt. And what the bank will do is they'll respond by decreasing your credit score. It's not their fault. That's just how the algorithm works. It says if a person with an 850 credit score takes out a new loan, they stop being perfect. Obviously, because now you're just taking out a new loan. But you have to understand, it also depends on the term of the loan. If you take out a loan for a very short term and pay it right back, then you can probably avoid having points knocked off. But if you're taking out a mortgage or a car loan, it may knock your credit score down a few points. But if you continue to pay on it and you pay on it on time and everything, your credit score, even though it gets knocked down a couple points, it may go right back up. The average length of history will be shorter on the new credit, obviously. The new credit activity will be higher. Basically, what we're talking about is your credit availability. That's how much credit you have access to. In order to be excellent in that category, you should have access to over $30,000, but real excellence is $50,000 of available credit. But they want to make sure that you're using less than 5%. So if you're using more than 5% of your available credit, that hurts your credit score. Now, some people will say if you use more than 3%, that hurts your credit score. But I'll say it like this. In order to make sure you maintain a high credit score, you have to have below a 5%. An out-of-date algorithm, yeah, okay, just like I said, the algorithm affects the numbers that you see when you look at your credit score. But it says some lenders will work with a much lower score. Of course they will. The lower your score is, the easier it is for them to charge you more interest. So if you have a 670, like it says here, you're not going to get a 3% mortgage. You're going to end up with a 5 or 6% mortgage. What they'll do is they'll tell you, well, your credit ain't shit right now, but if you come back, you can refinance when your credit is better. Here's the problem. You don't know if your credit's going to be better. This is the same lie that they used to tell the people when they were selling those ARM loans. They used to tell them, hey, your credit ain't shit right now, so you get this ARM loan for 3 years, and it'll be adjustable rate for, 27 years, but for the first 3 years, it's fixed. That's how people fell into that trap, because they were told that your credit will be better later, you can just refinance later. We don't know what the future holds. Nobody knew 2 years ago that half of these businesses are going to go out of fucking business because of goddamn coronavirus. Nobody knew 2 years ago. If you think about it, 2 years ago, nobody had any idea what was coming was coming. So a catastrophic disaster can happen. You can have medical bills. What if your mama comes down with cancer? What if your wife comes down with cancer? What if your child comes down with lymphoma or some shit? You don't know what the fuck's going to happen. I am telling you, you need to build your credit as high as you can build it. Do you disagree with me? Because there's some people on YouTube talking shit and saying you don't need good credit. So the question is, who do you disagree with? Do you disagree with me for saying that you need good credit and trying to tell you ways to build good credit? Or do you disagree with the fake YouTube gurus who are telling you you don't need to play the game?